Hello, hello, hello. Welcome now, Stock Trades. Oh my God, guys. I wasn't going to make another video today, but I just saw this and definitely wanted to share my thoughts. So this was released March 19. Health insurers retreat from ACO reach. So we've just gotten word that Centene Corp, a $41 billion business, is cutting their stakes in ACO reach, which further further brings what Mr. Andrew Toy was saying regarding how the ACO reach model is flawed. But let's go ahead and read this. I'm going to read it on speed. So I recommend watching this video on very slow mode. Okay, probably like a 0.5 maybe instead of a normal one, but I'm going to go ahead. I just don't have time to go ahead and read this slowly for you guys, okay? All right, there it is. That's a good speed for me. All right, let's go from there. Health insurers are pulling back from accountable care organization pilot program intended to reduce costs. For fee-for-service Medicare enrollees amid surprise stock medical costs and unfavorable regulatory changes. Alignment Health, Centene, and New Health scaled back their participation in ACO reach this year, while companies such as Clover Health and Clover Health withdrew from the model altogether. For the first time, programs for All right, so let's go ahead and just continue more. Then I'll give you my thoughts here real quick. So pretty much what they're saying here is that the ACO reach model, even though there was some trimming off of the fat, like Clover Health leaving and a lot of other agencies basically leaving and just decreasing their stakes, they still believe that it's still positioned to be successful. I don't know if that's just kind of front loading and them just saying that, but ultimately they do believe ACO is going to continue dominating the traditional Medicare beneficiaries in the future. I remember Andrew Toy was basically saying that there are some I would say lobbyists, but like there's people in the inside that they're speaking with and trying to fix whatever is the issue with ACO reach. But as we read and continue reading this, you're going to find something interesting here. I believe it's just this next paragraph. So ultimately, this is a lot of information was here, guys. So first things first is Sentient Health went ahead and basically, mic check, mic check. How are you doing, Chant? What's going on? So lots of stuff here, right? So Sentient went ahead and said they're going to be exiting 6 states, but they didn't respond to the interview request. Why would they? Why give that competition extra information? Competition like Alignment Health, which also no longer accept downside risk of ACO. It's their so out of the 89,000 ACO reach members they had a medical loss ratio of 102.2%, which is kind of right in line of Clover's, but again, Clover's like 99 to 100. even then with the Clover Assistant, it still wasn't able to basically, I mean, it's still doing marginally 2 to 3% better than the 102.2% of Alignment Health, which kind of falls in line with their normal medical loss ratio of the Medicare Advantage. But again, Alignment Health is going to be doubling down on the Medicare Advantage side, which is exactly what Clover Health is doing. So obviously, there's articles, and there's a lot of people that are kind of, uneducated. They're saying, oh, the revenue is going down. It's a terrible company. Well, no, because the industry is shifting now. ACO is not a viable model. In fact, I was saying a quarter before Andrew Toy was left ACO, I was talking to my stock terminal members, and I said, listen, guys, I think personally this thing is not doing good. This thing needs to get the hell out. And ultimately, that's good they're doing it, because that's where the industry is moving. And then this is funny. Alignment Healthcare is following the money, right? Health insurers generally report blah, 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 right? So let me just give you a direct quote. You've heard us say all along that we would do this so long as it supports our strategic objective with our provider networks, but in a way that causes us to lose money. So in a way, but not in a way, but not in a way that causes us to lose money. So ultimately, you're starting to see a lot of these members pull out because, this is a failed model system. And what's happening now, and I think like ACO, like CMS is kind of stupid right now, because like I know they're going to end up fixing this, because what's going to end up happening now is Humana is down like 20% plus. United Healthcare is down. So you're telling me now in their normal Medicare Advantage side, while all these new companies like Clover and Alignment are giving favorable medical loss ratios, especially Clover's, you're telling me that like Humana is going to go ahead and absorb the ACO reach, which is known to be very expensive. There's a high probability now that because even on their Medicare Advantage side, they're losing more money, there's a high probability that they're going to probably dial down on the ACO reach, because the competitors that are stealing the MA market are doing that too, right? And they're offering a better insurance company, okay? So, House and Senate Democrats want CMS to drop ACO reach members due to fraud concerns, et cetera, et cetera. Yeah, so I do believe that there's going to be some changes with ACO reach, but I just want you to kind of close your eyes right now and just imagine this. So just imagine, let's say ACO reach does get changed, because obviously, if like everyone, listen, guys, if everyone was successful in ACO reach except Clover, I would say, okay, guys, you know what? This is, we are the problem, right? Clover, screw Andrew Toy, right? We have a problem, right? Clover, that's a red flag. But guys, this is not a red flag, guys. I mean, like other people are retreating from ACO reach, right? It's not like, and other people are getting MCRs of over 102%. Okay. So it's not like this is a Clover specific issue, right? Whether what the shorts and what people like you to believe, ACO reach, the non-insurance side of the business, which Andrew Toy completely trimmed off. He tried it, 2022, he was heavy on it. And then 2023, he trimmed it back. Okay. That's what Sentient is doing right now, is it trimming it back. Okay. But now Andrew Toy is like, you know what? We're out. Right. So I think we're going to end up seeing this plan kind of play out, where other insurance providers are going to step out. And then ultimately CMS is going to have to figure it out. Right. So I think personally, Andrew Toy is going to wait until ACO reach gets fixed. And then what's going to happen is, I think like Alignment Healthcare and other ones are going to go back in, or he's going to watch other ones go back in. And he's going to study. He's even studying the people that are successful in ACO reach now. Okay. And he's going to look at those people and he's going to figure out, why are they successful? They're going to analyze and they're going to study the crap out of these people. And once they figure out what is the special secret sauce, that's when they're going to pounce on it. Right. So I just want you to kind of close your eyes and think about this. So let's say ACO reach fixes itself. Right. And it finally becomes a positive business model. All right. You remember how much Clover was growing from that perspective? It was growing in the 30, 40, 50, 70, 80%, 100% year over year. Okay. So just imagine once ACO fixes itself. Obviously, this is not a solitary issue. Other insurance providers are having this issue. Okay. So that to me makes me feel a lot better, because in the beginning I was like, oh, this is not good. Why is it on insurance side not fixing itself? Well, now we know it's not a solitary problem. That makes me feel a lot better. All right, let's go ahead. and just look at the questions here. Major insurance, Sentient and Humana have also highlighted in the analysis surrounding allegations of duplicative veteran affairs claims. I read something like that. Yeah. A few percentage points is a massive at the scales here. And if everyone else is shifting later, CLOV will be positioned to swell. Yeah. So, CLOV is doubling down on the Medicare Advantage side now, such as Alignment Healthcare. And we already know, I think Alignment, let me see. I think Alignment Health, guys, I don't think they have a PPO plan. I think it's just an HMO plan. I mean, I think, let me make sure. Like, somebody correct me if I'm wrong. Maybe they do have a PPO plan, but ultimately, Clover's, let me see, hold on. Yeah, maybe they do. So, it's very clear that these PPO providers are gonna kill Humana. I mean, they're really gonna start dominating in the MA space, right? Let me go ahead and open up Shani. So we think the ACO model is misguided and it is designed in such a way that it is an invitation to fraud. Board member in interview with Fierce Healthcare. Good. Yeah. So ultimately there, people are noticing that ACO is not working. Okay. This is good to see. Okay. So that's what I wanted to kind of share with you guys, just giving you guys this, because ultimately, this is the beautiful part about it. It's, life, the way it works is, let me tell you something about life, right? Right. So, once a problem is identified, the beautiful part about our United States of America is that we try to find the issue and we try to fix it. So I think right now we're in the process of finding the issue. And once CMS fixes the ACO model issue, um, just imagine the type of growth that um, uh, Clover is going to be positioned for. I mean, it's going to be insane. It's going to be insane. Like the time. Imagine, and it'll be like, imagine profitable growth. Imagine if somehow the Medicare Advantage side, the MCRs can be translatable for the ACO side. Just imagine the type of growth that you're going to get. It's going to be insane. Like, let me give you, because it's hard to believe, but let me just give you kind of the analysis here, okay? Because sometimes it's like hard to believe this. So what I'm going to do is I'm going to show you. I'm going to just like remove this and stop sharing screen. Let me share with you this intrinsic value calculation here. So, hey, how you doing, Mad Max? Yeah, no, lots of knowledge here, right? This, again, that's what I like to do. It's like, it was like the share, sharing is caring. So let me give you an example here, guys. Okay, so right now, Clover is growing around, let's say they're going to grow, I think, what was it? 1.23 to 1.3. We did this calculation before. So let's see. 2023, they had 1.23 billion. And then let's say for 2024, they're going to grow 1.25. So 1.25 billion. Okay, this is 2024. So they're going to be growing approximately 2%. Again, it's all about member retention this year. So we go ahead and put 1.230, take 5% of that. Oh, hello. Make sure I did it wrong here. All right, let me equal this, multiply it, 61.5. And let me go ahead, divide by outstanding shares. So if you basically average it down to what Clover is growing right now, the recession is 62 cents. That's if we're going into a recession. We know we're not going into a recession. The bear is 97 cents and the base is 120. Guys, that's like that's like perfect, right? The base is 120. Why am I like saying that's perfect? Well, because what is the overall price to sales ratio for insurance companies? It's 0.5, approximately plus or minus 0.5, right? I mean, Oscar's like 0.67, right? But ultimately it's 0.5. So that means if their revenue is 1.2, I'll just say 1.23 billion times 0.5, we're looking at $615 million in market cap value. Okay. So if you go ahead and take a look at Clove now, it's sitting at $408 million. Okay. So you take 408 million, or just, again, 408 million, you multiply it by 2, you get 82 cents, right? So you take, 0.61 point, $600 million and multiply it by 2, you get $1.23, right? Which falls right in line with our intrinsic value calculation. This is why I said the intrinsic value calculation is accurate, right? It's just the only issue with Clover is it's not growing right now, right? And that's what they're doing, is they're just basically preserving the overall growth rate, right? They're preserving and trying to switch from the unprofitable side to the profitable side. Once we get back into this, and let's say we're going to grow from 1.23 billion, once Clover gets back to its high horse, I think, like, let's say if it gets back to that, 75 to 100% growth rate, you're again, that's a $202 stock price. Now, we believe that no company can grow 75% for like 10 years straight. So if we were to divide that by 2, which is an earnest growth of 37.5%, you can see that's a $20 stock price. Okay. $20. All right. So, I definitely think, as of right now, once those growth rates start increasing, you're going to start seeing the stock price go up. But the growth rates need to become profitable. And the problem is the ACO model that has that amazing, crazy growth is just not, the MCRs are not, 85 or lower, right? They are over 100%. But the beautiful part is it's not just Clover. Okay. So let me go ahead. Good stuff. Clove is a long game. We are here for the marathon, not the sprint. Exactly. Is Vivek still heavy involved in Clover? Has he been part? I don't know. Honestly, I don't know. That I don't know. Feels like the PT is getting smaller and smaller. I know, right? I know, right? We want next quarter to stay above $1. What time frame is for the price? So the thing is, when it comes to price targets, we don't know when they're going to hit, right? We don't know when. We believe that there's going to be some form of proof of concept along the way as interest rates come down. You see, interest rates are the issue that's tampering. There's multiple levels that are tampering stock prices for small caps now. The big one is interest rates. The second one is inflation. Okay. Inflation is coming down. That's gone. Okay. So it's interest rates, and then it's profitable growth. So right now, Clover's fixing the profitable growth. But here's the thing. Even Warren Buffett said this. The stock market is about to turn into a casino again. Okay. And once it turns into a casino, all evaluation metrics are going to go into the bull phase, right? They're going to literally get to the bull and even past the bull phase, right? And they're going to be growing at like just the perfect runway, right? So I think this is going to play out anywhere between 2026 and 2028, right? I think we're going to see a proof of concept. Hopefully by this year, we should see some form of proof of concept, but definitely when they become free cash flow positive. So what are things I'm looking forward to? Number one, I'm looking forward to interest rate cuts. We already know 3 is coming. That was just verified by the FOMC meeting. I'm looking forward to Clover Health getting that adjusted EBITDA, right? I'm looking forward of them getting back to upgrade to 3.5 stars. Okay. I'm looking forward to ACO fixing itself. Okay. I'm looking forward to the end of the year 2024, them saying they're going to be upgraded in 3.5 stars. So the market will forgive them for 2025, as what Smiles is saying, for being 3 stars. And then I'm looking at the end of 2025 to see, hopefully, if there's an avenue and pathway for 4 stars, which is what Andrew was saying. And once they get to the 4-star rating, guys, it's checkmate. It's checkmate. It's done. Okay. So when will free cash flow be positive? So we're going to have to figure this one out. It's either going to be, either going to be this quarter or this year, or it's going to be in 2026, right? The reason why I jumped to 2026 is because that 3-star rating, I got to figure out how is that going to affect their gross margins. Okay. So that's kind of, my understanding of this. But here's the thing. I'm looking at this company as a sleeper. Okay. Right now they're growing at 2%. Okay. That's why the stock price is low. All right. If we were to grow them at 0%, this is their worth. Okay. And they're trading currently near the bear case. Okay. We already know they're going to be going to that profitable range. So this is how the market is evaluating them. They're evaluating them at a 0%, even at like a negative, like a negative 5%, right? Like if you really want to see it right now, like if you really want to make the bull case accurate, let's negative 10%. Oops, sorry. Make sure negative 10%, negative 8%. Yeah. The market is evaluating them at a negative 8% growth to make it the bull case 81. Okay. Cents. That's not the case, right? Because they cut off their non-insurance side. So the market now, I think, is going to realize how they're growing this year. And ultimately, this is going to be a sleeper. We already see Renaissance Technology increase their positions, et cetera, et cetera, et cetera. I feel like I'm saying the same thing over again. And like, it's getting really annoying. You know what I mean? But like, ultimately, this is how I'm seeing things, right? This is a sleeper because one of these days they're going to turn on the growth machine and you're going to say, the quarter is going to be released and the quarter is going to say Clover Health grew 55% this year. And the stock price is going to jump to $20-$30. Okay. It's going to just it's going to fly up there. Okay. And that is the avenue of what I'm looking forward to. Okay. So that this is why I'm very excited for this. Okay. So, but as of right now, reality 2%. Okay. So, when will free cash flow? Honestly, like I'm so bullish on the stock price, especially at 70-80%, like it should be at least $2. Exactly. It's annoying because the stock price doesn't reflect the bullishness. Yeah, of course not, right? But again, if you go to AMD back in the day used to be $1.95. Okay. Well, let me see. I can zoom in here. AMD back in 2012 used to be $1.95. Just replace this with 2022. Just instead of the 2012, instead of the 1-2, take the 1 off of the 12 and put a 2, right? 2022, right? Just back in 2012, AMD was $1.98. Okay. And Shant, there are people back in 2012 that were saying, man, it's annoying that the stock price for AMD doesn't reflect the bullishness. Okay, now look at it now. 10,000% increase. More than a 10-bagger. Okay, let's go ahead and take a look at Enphase. Okay, Enphase. Enphase used to be 72. Let me go here. 77 cents. Okay, used to be 77 cents right here. 72 cents. And it went up all the way up to $335 with a 46,000% increase. It fell down to $113 stock price or plus 113. So, a 15,000% increase. Okay. NVIDIA here in the early 2000s, 79.78 cents. Where is that? Even better. NVIDIA, 68 pennies. Okay. Look at it now. 107,000% increase. Okay. I'm not saying this is going to be an NVIDIA. The NVIDIA is a different story. What I'm basically telling you is that this is how Wall Street works. Okay. Like if you look at our watch list in our stock picks we have in our stock terminal, we called out SMCI, and SMCI is up 240%. It's doing really damn good. And in a year, just 1 year, 777%. But when nobody wanted nobody wanted SMCI here when it was 2022. Nobody wanted it. It was just going up like a little bit, right? All of a sudden it just shot up. Okay. What I'm basically saying is that once the growth machine turns on, things are going to flip. Okay. And then all of the sadly surface retail investors that just know nothing but the surface knowledge of life, and they just don't know the meanings, and they walk through the surface world until they die and not understanding the meaning of life, which is sad. They're going to look at the price and they're going to be like, whoa, it must be a great company, right? Right. I mean, imagine with all the knowledge I have now, imagine how PhDs, especially theoretical physics, how they look at the life, how they look at us normally. They look at us like freaking idiots, probably theoretical physicists. But overall, that's what I'm thinking, right? And also, I'm seeing Brandon is back online here. Man, Brandon, you're my number one fan. You know what they say? When you have the people that support you and the people that don't like you watch your video, you're doing something right. Okay, so Al Stock Trades, what do you think Clover Assistant when it comes to data? CA basing its data on a 70 to 80,000 members. And in truth, that's not much data compared to Humana and United Healthcare, who have millions. Hey, Michelle, don't let them out yet. Let me just finish the live here. Is that why hold on, maybe that's why they delayed it. Okay. Okay. So anywho, that's true. It's not a lot of members compared to the incumbents, but if you don't recall, a couple years ago, Clover only had 40,000 members on the MA side, right? They just recently added these 40,000, right? So I think once they double down on this, and I believe it takes them approximately a year and a half to a year to, get at that MCR of, 80%. I do believe that if this model can scale, I do believe that it's going to be good. And in terms of comparison, Humana and United Healthcare are HMO plans versus Clover's PPO, which we talked about like a lot, right, in my past videos. Right. So overall, yeah, I'm loving the comments here. You guys are hilarious. But yeah, so my dog just came back from the groomers, but he said, hold on, his mouth is bleeding. So what's going on? What'd they say? No, I don't know if he bit his tongue because he go play fetch at the park and all of a sudden his mouth started bleeding. Is he okay? Okay. You can see all the blood on his mouth. You okay? Man, sometimes the groomers are not careful. They really like don't treat dogs well sometimes. He's like drinking a lot of water, poor guy. Okay, guys. Well, my poor doggy. Yeah, so those are my thoughts, guys, right? So I hope this was a helpful video. Flagship plan is PPO. Maybe they start prioritizing HMO more. Yeah, maybe, exactly, right? So Brandon here, groomer must be a clove holder, right? That's terrible. That's some dark humor, man. But yeah, so overall, this is the analysis here, and all you need is Clover getting back to that. Just imagine, let's just say, for example, they turn into a 15% growth rate. 15% growth rate, we're already at, that $4.15, right? They were growing at one of the quarters last year, 18%, right? Which is equivalent to essentially when Chamath was buying in at around $5.75. So overall, this is the idea here. So these are my thoughts again, guys. So there's going to be a time and a hiatus where I'm not going to be posting a lot of videos. My schedule is picking back up again. So I just wanted to just kind of throw this out there. There's a lot to be thrown out here. Made a lot of videos. And I hope that these videos you can kind of stick them, put them together with, everything we talked about. If you go ahead and, go ahead and hear, we'll talk about it. So we talked about the market talk. We talked about the quartet, whatever the mental health thing is cost. So there's a SaaS discussion for Clover. Clover's already thinking about increasing their overall revenue from the SaaS perspective. We talked about how we're looking forward through that SaaS price to sales of anywhere between 3 to 6 or 7 or even higher, and we know that's not fake because they're hiring somebody from the VP of SaaS or whatever. So we know that that's going to materialize sometime in the future. We talked about how the MA plans are turning more into wanting to be more PPO, and now we realize that ACO reach, a lot of folks are exiting that are not just Clover Health. So um operational cost efficiencies, those are a big deal. That is something I'm monitoring. So the SG&A, those are the things I'm trying to look at, you know what I mean? So like, the thing is, Clover needs to increase its revenue, right? That's what they need. They need to get more revenue to offset that SG&A. And if they're able to keep their costs like that or lower, and if they scale up, even with those types of costs integrated and stabilized, holy shit, it's going to be a lot. It's going to be a lot better, because then all that will go to free cash flow and net income. Okay. Brandon wishes he got to make out with Al. That's why he watches all his videos. I know, man. I think I'm gonna have to take my shirt off. Right. All right, guys. So I hope this was helpful. Again, good article here. Shout out to our member that posted it. So that's a nice article. Match. Let's see what this is. Hmm. Oh wow, so there's more positions now. Oh, positions filled. Yeah, this is you can see here. Internal medicine. So there's not a lot of positions. Almost like 1,000 for these positions being unfilled. These ones here, and then the rest down here are being filled. That's interesting data. Yeah. No. This is more for me, guys, not for you. I'm just surprised that this article, there's an article about it here. That's why I clicked on it, or was here. Anywho, guys, hit that like button. Don't forget to subscribe, and I'll see you on the next one.